really fueled gold to higher pricing. But the fact that Trump won, there was a peaceful transfer of power. The uncertainty factor that was baked into the price of gold diminished, came out, and that's why we've seen gold correct by $200. Normalize interest rates. In other words, take them between 3% and 3.5%. So there's a ways to go. If they continue to cut rates, that's going to be bullish for gold. If rates are maintained at the current level, if they pause, that would change the dynamics to what I believe is going to happen, which is that the Federal Reserve will continue to cut interest rates as they normalize them to between 3% and 3.5%.
Gold is traditionally viewed as a hedge against inflation, but higher interest rates tend to diminish its appeal since it doesn't generate yield. The recent increase in US Treasury yields, now exceeding 4.4%, coupled with a stronger dollar, has reduced investor interest in gold. On Thursday, November 14th, gold prices fell for the fifth consecutive session, reaching an 8-week low amid a stronger dollar and rising Treasury yields. The drop was fueled by increased uncertainty in global markets about the Federal Reserve's pace of future interest rate cuts. Gary Wagner, editor of thegoldforecast.com, emphasized that Trump's election victory has significantly influenced recent trends in U.S. equities, cryptocurrencies, and gold. According to Wagner, the $200 decline in gold, from a record high of $2,820 to about $2,600, resulted from the reduction in uncertainty after the presidential election. He also underscored the impact of the Federal Reserve's interest rate decisions on the gold market, noting that the Fed's actions are crucial in determining the metal's future trajectory. Investors are closely watching the Federal Reserve's stance on interest rates. Although recent inflation data suggests that the Fed might slightly ease rates in the coming month, expectations of higher inflation next year have led to fewer anticipated rate cuts. Wednesday's data indicated slower progress in reducing inflation since mid-year, which may lead to fewer interest rate cuts from the Federal Reserve next year. According to the CME FedWatch tool, markets currently predict an 82% chance of a 25 basis point rate cut by the Fed in December, which would be the third cut this year. The Federal Reserve aims to normalize interest rates to a target range of 3% to 3.5%. Gary Wagner believes that if the Fed continues with rate cuts, it will create a bullish environment for gold. He anticipates that the Fed will proceed with additional cuts to reach its target range, a move he views as positive for gold prices. Let's delve into the video to gain further insights. Before we begin, consider subscribing to the channel and hitting the bell icon to stay updated with the latest content.
Certainly, the fact that Trump won is a decisive factor in what we're seeing in U.S. equities. Those have moved higher. Cryptocurrencies out of control to the upside because he is an advocate, and gold, oddly enough, moving lower. My best explanation for why we've seen gold drop $200 from the all-time record high at $2,802 down to current pricing at around $2,600 is the last leg of the upside move rally in gold that took gold from about 2640, 27 up to the all-time record high was largely based on the uncertainty of the outcome of a presidential election, and most importantly, whether or not we would get a decisive victor, meaning an uncontested result. Had the other candidate won and Trump chose to say that that was unfair or something, that would have really fueled gold to higher pricing. But the fact that Trump won, there was certainty in that. There was a peaceful transfer of power. The uncertainty factor that was baked into the price of gold diminished, came out, and that's why we've seen gold correct by $200. Prior to the election, we had both the dollar and gold moving higher.
Yes.
Once Trump got elected, the dollar continued to gain strength, but we had the standard correlation between the dollar and gold reemerge, in which dollar strength really hindered gold moving higher. In fact, gold was unable, as it had prior to the election, because of that uncertainty factor, was unable and has been unable to overcome dollar strength. It's a very rare occurrence when you see the dollar and gold moving higher. in tandem at the same time. And we've seen the standard correlation move back into the market, in which dollar strength is definitely putting a bearish headwinds to gold. What we need to see is the action of the Federal Reserve. Now, they have cut rates, a jumbo rate cut a little while ago, a 0.25% rate cut in November. It is anticipated that the Fed will cut by another 0.25% at the December FOMC meeting. And most importantly, what they are focused on in terms of their dual mandate is to right now normalize interest rates. If they continue to cut rates, that's going to be bullish for gold. If rates are maintained at the current level, if they pause, that would change that the Federal Reserve will continue to cut interest rates as they normalize them to between 3% and 3.5%.
Over the past 5 days, gold's value has declined by 5.78% following the 2024 presidential election. This drop is not an isolated event, but part of broader market trends driven by geopolitical and economic factors. The recent decline pushed gold below key support levels, including its 100-day moving average. Despite this short-term pressure, market experts remain optimistic about gold's resilience. Technical analysis indicates support for gold at $2,540 to $2,520 per ounce, while resistance is expected between $2,582 and $2,605 per ounce. Gary Wagner believes that gold is currently in a corrective phase, having likely completed the A wave of the correction. He explained that the next phase, known as the B wave, may be starting soon. This counterwave could result in gold prices rising between 50% and 75% of the initial decline, indicating a potential rally to around $2,688 or $2,740. Now let's redirect our attention to a video.
What we are looking at is a daily standard candlestick chart of gold. And on that, I'm using Elliott wave along with Fibonacci retracements and one moving average in blue. That is the exponential moving average. It is my current belief that what's called the impulse cycle in Elliott wave terminology, meaning waves 1, 2, 3, 4, and 5, ending at 2802, completed that impulse phase. And I also believe that we are in a corrective phase. A corrective phase is part of the 8-wave cycle, 1 through 5 being the impulse and an ABC being the 6th, 7th, and 8th wave. I believe that we have probably completed the A wave. In other words, the $200 move from 2,800 down to 2,600, I believe is most likely over, and we will enter what is called a counter wave or a B wave. Now, the counter wave or a B wave, and I'm going to make that a little bit clearer, is a point in time where we'll see gold rise anywhere between 50%, 2688, and 75%, 2740 to round down as the next rally. So I think that short term, we are going to see gold return to rally mode, but not take out 2,800. However, I am labeling one of our models is called a running flat correction, which anticipates the final corrective wave, the C wave, to actually be above the A wave. Typically, it's below. The reason I believe that there's a high probability of that is because of the fundamentals at play that have moved gold dramatically higher. If that's the case, in Elliott wave theory, once you complete the full 8-wave cycle, 1 through 5, ABC, if the fundamentals that drove the market to have what we call a bull count remain, in other words, if the fundamentals remain, then we will start that clock all over again, doing A wave 1, 2, 3, 4, 5, and that would be next year. And if that's the case, it would take out 2,800 and go to a new all-time record high. But before we get to that, we have to complete this corrective phase if Elliott wave has any true merit and is accurate in being able to predict pricing. It's worked well for me. The models that we created, I anticipated 2,800. I actually looked for it to be an extended fifth wave, which it turned out not to do, which was my upper level call of 2865. But it did run to 28, and I do believe that that completed the 1 through 5, and that we've gone through really the worst of the correction, meaning a $200 price drop in gold from 2,800 to 2,600. Right now, I would look for gold to find support here or maybe a little bit lower, but not too much lower. I don't see it going much below 2,600. And as I said, I would look for that counter wave to take gold back up to 2,700 or 2,740. One more small correction, and all things being equal, my belief is we will restart the bull count or bullish cycle will run again. If you recall back in 2011 when gold ran virtually from, depending on where you go back to, 700 or 1,000 to 1,900, it went through either 2 or 3, I believe it was 2 full bull counts. In other words, 1 through 5 ABC, 1 through 5 ABC. So it ran through it twice. There's no reason to assume that gold will not return to a full bullish count after this correction.
Gold, traditionally viewed as a safe haven asset, has seen a notable downturn amidst recent global events, prompting a closer look, especially considering its market capitalization exceeding $17 trillion. From the highs in late October to its current value of $2,547, these fluctuations warrant a deeper analysis. The market's reaction to the election outcome mirrors patterns observed in 2016, indicating that gold's price movement post-election is not entirely unexpected. This historical context underscores the distinct way gold responds to geopolitical events, setting it apart from the more volatile movements seen in stocks and cryptocurrencies. What's next for gold? Feel free to share your thoughts in the comments. If you found this content helpful, give it a thumbs up, and remember to subscribe to stay updated. Thank you for being a part of this journey with us.